Okay, well, we'll go ahead and get started. Welcome everyone to CapEd Credit Union Presents Lunch Money. And we have an exciting webinar today. And the title is What's Happening in the Treasure and Magic Valley Real Estate Markets. And with that, I will turn our time over to Dan Sullivan to do the introductions, and then we'll get started.
All right, thank you, Lisa. We're excited to have with us several dignitaries. We have Kittie Shervik, who is the VP of Marketing and Credit Resolutions with CapEd. Also have Jordan Beard, who is with Gem State Realty down in the Magic Valley, and Jim Paulson, who's with Progressive Realty Corp here in Ada County. So let's jump into with Jordan real quick. Jordan, tell us real quick just a little bit about yourself.
Well, I'm born and raised in the Magic Valley here in Twin Falls. I've been licensed since 2007. I'm one of the top producers in my market. I do about $15 to $20 million in business a year and about 80 to 100 transactions. And last year I was the WMVR president, so I'm officially in the past president capacity.
Awesome. Appreciate it. Thanks for joining us. Can you tell us what's going on in the Magic Valley? We're seeing a lot of crazy things here in Treasure Valley, but tell us what's going on in the real estate market there.
Well, we're on fire here, just like everywhere else. So we're struggling severely with our inventory. Right now, we sit at over 650 agents in our market with about 35 active listings in the Twin Falls proper. So listings are moving fast. We're getting new ones, but they're not replacing what's selling at the same pace.
Crazy. 35 listings and 650 realtors, is that what you said?
Yeah, we're just over that number, correct.
Yeah, that's nuts. Jim Paulson with Progressive Realty Corp. Jim, tell us quickly a little bit about yourself and
Certainly, I'm Jim Paulson. I'm the owner and broker of Progressive Realty. I've been peddling houses for 30 years here in Idaho, and my company is a small independent brokerage. Do classes for the National Association of Realtors and the Council of Residential Specialists. So very glad that I'm here to help with this panel today.
Great. Well, we appreciate you being here. Tell us from your perspective, what's going on in Treasure Valley real estate today?
Well, the numbers are just larger, but similar to what Jordan mentioned in that we have probably 4 times as many agents, but percentage-wise competing for the same lack of inventory. So a lot of people don't realize on an annual basis nationwide, if you divide the number of transactions that are closed by the number of agents, that equates to about 6.5 transactions a year per agent. So everyone thinks these realtors are making a god-awful amount of money, and it's so easy, but there's a lot of competition out there. So it's important to team up with the right agents like Jordan to get people that know what they're doing, that have the experience to back it up. Because in this active market, you don't want to be dealing with somebody who is typically working a second job. If you've got to be first on the hunt to find a house and they're not available when you are, you're setting yourself up to fail.
Sure. Appreciate that. So tell us as far as some numbers. I think you came prepared with some numbers to share, whether you share your screen or what, but can you highlight some statistics for us?
Certainly. So here's one from the Ada County Association of Realtors, which is now the Boise Regional Realtors, but they pulled their data out of the Intermountain Multiple Listing Service. But you have to be very careful with statistics, because there's an old adage that figures don't lie, but liars figure. So if you can pull your own criteria, adjust them. Do you include new construction? Do you not? Do you include condos? Do you not? You can really skew the data in a hurry. So whoever shares the stats with you, make sure they know how to analyze them. But they should be consistent. So you don't want to be changing the metrics every month. You want to be consistent month over month, year over year. So in this one, it shows that the median sales price, and again, the median is the point that there's as many homes above as below that price. So unlike an average, if you have a $5 million home selling Eagle, it's going to skew the number upwards like it does on some of the online valuation portals. But that represents a 45% increase over last year. The number of homes sold, days on market, only 12 days on the market. And this data includes new construction. So that's really skewed because that number is really, typically they're on the market for just a few days. And the only reason it shows up on the MLS being that long is because we're negotiating multiple offers simultaneously. And like Jordan mentioned, the inventory is way down from last year for that size market.
Mm-hmm. Yeah, we've certainly all heard the stories of somebody who lists their home and sells it within hours. And then I was just looking at some statistics from last year. The median sale price a year ago was $375,000 in June of 2020. So things have really gone bonkers here in the Treasure Valley, across the nation. So Jordan, can you go ahead?
Actually, I have a quick question. Jim, can you enlighten us on what you feel is leading to this increased value in our valley, state, and across our country?
Yeah, so a lot of the major housing economists like Lawrence Yun, who's the chief economist for the National Association of Realtors, they've been predicting this for over a decade. Everyone kind of pulled away from the housing market when it crashed in 2007, 2008. People's credit was horribly tarnished for a lot of folks, so they couldn't get a mortgage even if they wanted to. Banks quit lending to developers and to builders. We've been playing catch up with inventory ever since. And right now we have such a lack of skilled labor. We have a lack of building materials. I mean, some appliances are 6 to 9 months out. The increase in lumber prices, the millennials are getting out of the parents' basement and out of roommate situations, buying homes. So we've just got a huge influx of demand without the inventory. So that's one of the main premises of economics is supply and demand. And we are just horribly imbalanced right now. And that's happening nationwide. Plus lenders like CapEd have great interest rates. So the affordability is such that it's still cheaper to buy than it is to rent.
Sure. Jordan, you said you got into this market in 2007, which was the beginning of the end of our last big push. Do you see similarities between this one and the last run up? Differences or similarities?
So I discovered that you don't bounce as high when you start at the bottom. I was actually a home builder prior to the 2007 crash. And in some ways it was similar, at least in Twin Falls. You couldn't find land to build on. Developers, because that's such a long process of engineering and development, they were not prepared for the last boom. And so I had gotten my license just to service my own needs. But when the market did what it did, I chose to stay with this. And as it turns out, I do very well with it. It's hard for me to state the similarities. My broker's been in this business over 40 years, and he'll state he's never seen anything quite like it either. Yeah, we're just in a different place. It's a perfect storm over the last 12 to 18 months, with COVID hitting right when people normally are putting their homes on the market in the spring. There was a lot of apprehension to list your property, although we were very fortunate in Idaho to be deemed essential workers. So we were able to continue providing our services, but the inventory never came like it normally does in the spring. And then with factories, sawmills, the supply issues with COVID shutting them down, and then the skilled labor shortages. Yeah, it's just a perfect storm, like I said. So yeah, I don't know that I would classify it similar to pre-07. That was a mortgage issue, I think, the collapse. This is a true supply and demand issue. and an economic issue. Idaho being so strong, we're drawing so many out-of-state buyers this go round that we've just got more buyers than homes to sell.
Sure. I want to just real quick touch on the mortgage issue you brought up, which Jim and I got into this industry about the same time, about 30 years ago, and Kittie's not old enough to be around that long. But she and I worked together back then too. So, the last go around, there was some interesting things that happened with the mortgage side that you mentioned. As the market started to slow a little bit on the mortgage side, then Wall Street allowed the mortgage brokers to do more progressive, I guess, riskier loans. And so we were able to do loans because Wall Street was buying them. Then us on Main Street were doing the loans that they were buying. So there was a lot of stated income. There was a lot of very, very high loan to value products out there. And so we were making loans to people who really didn't qualify for the home that they were buying. And in some cases, grossly didn't qualify for the home they were buying. There again, Wall Street was buying them. So we were selling them. And so this go around, I think one of the differences on the mortgage side is everybody has to qualify for a mortgage. And we bang our head against the wall every day in the mortgage industry trying to get people to qualify for these higher prices. But that is a difference, is that we don't have a whole bunch of people out there who don't qualify for their mortgage. So, Jim, I was going to ask, when does it all end?
So at least here in Idaho, we can't build ourselves out of it. Right now, there's not enough skilled laborers to build houses quicker. We don't have lot availability. The developers are scrambling trying to bring those on, but some of the cities are actually putting a moratorium out there until they can create impact fees to pay for some of the growth. I can't believe communities in Idaho didn't see growth happening and didn't prepare for that. But it's going to be interesting to see what happens as some of the outlying cities, the smaller cities typically, stop their ability to build for, say, 6 months. Are those builders just going to go to a different area to try to compete? We don't have enough skilled labor. We talked about the supply shortage. So usually, the pendulum kind of corrects itself. It goes one direction, builds up too much momentum, stops and slows and comes back the opposite way till it repeats itself. But right now, as long as Idaho keeps being on the where to move list and our economy keeps outpacing the economy on a national level, I don't think we're going to stop anytime soon. I think that the only two major things that I can predict is if the interest rates jump drastically, that'll make an impact on borrowers' ability to buy. Also, if taxes as far as income tax changes, where it's not economical for people to sell their properties, if they take away the 1031 exchanges, some of the capital gains things, people from out of state might just choose to keep their properties as rentals instead of selling them. And so if the people aren't pulling the equity out, it'll impact the ability to buy here.
Mm-hmm. Okay. Jordan, same general question, but what does the end look like? What things are we gonna start to see? Any idea?
Well, that's the question I get on a daily basis. What's the smart move? Do we sell? Do we buy? I never advise anybody not to sell if it's time to sell. It's you're going to sell high and buy high. The old sell high, buy low doesn't really exist in a market like this for sure. You're definitely going to be competing, and there's certainly some market apprehension to list when you don't know where you're going to go. So that's another contributor to the low inventory, is people waiting to find that replacement before they put theirs up. But I most certainly think we've got a few very good years ahead of us still, until some of these surrounding state economies get to the point that those people can't or don't want to come. But the type of buyers I'm seeing are baby boomer and younger that are able to retire younger because our cost of living is less here, and that's too appealing to not take up for a lot of people.
Sure. Jim, you mentioned some of the baby boomer, or not the millennials getting out of their parents' basements, which is not necessarily always true, but certainly get out of the roommate situation, things like that. And I think who's really taking it in the shorts right now is the first-time home buyer in this market. So are there anything out there to programs, ideas, creativity, anything that's really come along to help the first-time home buyer get into these horribly expensive homes?
Well, the one thing that is a huge thing right now is wages in Idaho had been stagnant for so many years. And I can't believe the run up that's happened just in the last year after COVID, because effective 3 months ago, we were one of only 2 states where our employment level already exceeded pre-pandemic levels. And I went to the grocery store last night. There were 2 stations that are usually service operators, like the deli counters, the bakery, the very hands-on customer interactive people, and they were closed because they couldn't get enough staff. When McDonald's is paying a sign-on bonus, never heard of a sign-up bonus at McDonald's. They are now paying if you walked in and worked for them today, they will start you where 3 years ago, their mid-level managers got paid per hour. So the wages are keeping up, they are increasing. I saw on the Parade of Homes yesterday a sign where entry-level jobs at a production facility with no skills starting at $18 an hour. So as those wages go up, it'll help. You guys know in the mortgage business better than I do that they've just passed some FHA regulations for recalculating student loan debt. So since that's going to let the borrowers qualify for more homes, that'll help. I think a lot of it is going to be the buyers need to understand the market. They need to team up with agents and realtors that understand the statistics so they set the right expectation to start with. But here in Idaho, we have like the first-time home buyer savings account. It's not a huge thing, but it helps. Knowing about the grant programs, the community reinvestment funds, the low to moderate income programs that are out there, the bonds, some of those type of things to help that first-time home buyer. It's a niche, and if the realtor doesn't understand that niche, and the lender doesn't, like the mortgage credit certificates, there's some amazing things, but unfortunately, most realtors don't take the time to learn them.
Sure. Which I'll put in a quick plug for next week, or this Thursday. Sorry, this Thursday Kittie and I are doing a similar lunch money seminar on first-time homebuyer programs, how to get into a first-time home. We have one of the best housing and finance agencies, Idaho Housing and Finance.
Yep.
We have one of the best ones in all 52 states. I get around and talk to lenders in other countries, or other states, and they're all amazed at what Idaho housing can do for us. So we have some amazing resources. So if you're out there and you want to listen in, and so next Thursday, we'll have more information on that. This Thursday, we'll have more information on that shortly. So anyway, let's real quick. Are there any questions from our listeners? You can go to the chat and enter in those questions. We're monitoring the chat, so if you'll go type in questions you might have for any of us, Jordan, Kittie, Jim, myself, we'll keep an eye on those. So for either one of you, when are homes going to be affordable again for the first-time home buyer?
You want to take the lead on that, Jordan?
I'll tell you, it's really hard to be competitive right now. My buyers are in the double digits on many of their offers. We're having to be very creative in being competitive. You want to be careful, but you're competing with buyers as a first-time home buyer with little funds down, likely needing closing costs. It's very hard to compete with these large equity buyers that are coming into our market. So I've been putting a few buyers in positions where they're using private funds to be a cash buyer and then refinance later for better terms. We've been expanding our radiuses as to the city we're shopping to get into the smaller, more rural areas. I've got a school teacher from Bellevue with CapEd that we just bought a home in Twin Falls because his Bellevue market is running away from them up there. So similar Twin Falls buyers are buying in, Filer, Buell, Kimberly, places they may not have otherwise looked. But yeah, it's just really hard to be competitive. And as far as when those numbers are going to come down, I think it's going to be a little while, unfortunately.
Well, the one thing I'd like to add to that is I hate to ever reference and compare California to Idaho, but for 40 years or maybe 50, people complained about the prices in Southern California were out of control, didn't keep pace with the locals. And when a $3 million house there is a starting point, and it continued to escalate for 40 years with the exception of about 6 months, that's kind of the market. Why were they all going to California? So they're not going there anymore. Those guys are coming here, but it's going to be a new normal, in my opinion, right? One of the problems is we don't build entry-level homes. I mean, some of these companies got huge $1 million, multi-million-dollar grants to build affordable housing, but they were putting in top-of-line windows, granite countertops. We don't build small affordable condos. We're building fourplex villages instead. So we need to, in my opinion, make those condos instead of fourplexes so people can build their own equity instead of their landlords.
Sure. Do have a question from the chat. What is your opinion on how Idaho processes offers that come in, accepts offers until the deadline, typically chooses the best one? I'm from a state where sellers have to evaluate an offer right as it comes in, and they have to accept the offer an offer at asking price. Certainly makes it difficult to compete with developers and out-of-staters for Idahoans.
So on that, at least here in Idaho, we have very different rules. Our legislature is very pro private property rights. And so if it's the seller's house, they can choose amongst offers, and offer is just that until it's executed, right? So until both parties sign it, it's not legally binding. And there's so many other terms associated with an offer. It's not just price. It's closing date. It's the type of loan they're getting. It's going to be based on appraisal and inspection, the competence of the listing agent, the competence of the selling agent. So many factors. It is not just like buying bread at the store based on price.
Sure.
And in Idaho, we're required by law to present all offers. And so offers don't get passed over or skipped. All offers, even after acceptance, are presented to that property seller. So the acknowledgement of the offer or the acceptance of the offer within the deadline is only to hold that buyer to the contract that they offered. It's not a mandate that they must respond by that date. The response is just what locks that buyer in.
Great. Okay. Are there any strategies out there that you've seen that are working for the first-time home buyer? Things that they might do differently in their offer, in their home search?
So on that, the home search, one of the most critical things, in my opinion, is timing. So I think the home buyers need to team up with their realtor, get set up on what's called a drip campaign, whereas brand new listings hit the market, they're made aware. There's a lot of agents and brokers out there right now doing what's called a coming soon, where as they're getting the home ready, they pre-market it. It's not going live on all the public portals. but it's out there working with agents that are well networked. Is smart, because if they have a huge book of business and they have their feet to the information and kind of know what's coming, what's not, then they can keep things in mind before they ever even hit the market. So before they ever even hit the market, another segment there is new construction. Is if you know your budget will allow for a certain price point, find out what builders are building that price point. If you have time to build, go that route. Another option is some of the major builders here in Boise. They're waiting till the house is about 30 days from complete from hitting the MLS, because they want to control the price point, the schedule. So if you know, for example, builder A is they typically build in that price point, talk to some of their, have your agent talk to some of their reps, see what they've got coming, cruise the subdivisions, find out, how come this house doesn't report ever being sold, but I see it under construction. What's the story? And then you keep your foot to that pulse. And when it's available, you'll be first in line to hopefully put an offer in.
Jordan, anything to add to that?
Oh, I agree with all that. Choosing somebody that you work well with is very important, but also making sure that they are well connected. This is a timing business right now, and a who you know and what you know. And I would say 20 to 30% of everything I do right now never touches the open market, which is not fair to prospective lookers, but I'm servicing my clients' needs. And it's a who you know, what you know scenario. But being fast, being early, and unfortunately housing, although it's your largest expenditure of potentially your life, you need to be prepared to act. There's not really time right now to think it over, to comparison shop. You've got to be ready to act.
Sure.
And
Okay.
another thing on that, Dan, is, you kind of answered that question yourself previously, talking about the Facebook Live presentation that CapEd's doing next Thursday, right? Is targeting in on that specific question. So education is huge.
Yeah. And if I could say anything to a first-time homebuyer out there, it would be get with a realtor and a lender well before you're ready to buy.
Right.
You're thinking about buying a year from now, go visit with your lender, your realtor, start putting together a plan. Let's have a look at your financial situation, tell you what the down payment's going to be, tell you what your credit needs to look like, and start working towards those things. We don't see too much of it recently, but we've seen certainly a lot of times where somebody will go out and find a realtor, they'll make an offer on a house, and they come in and with their purchase agreement to the lender, and come to find out that they don't qualify for the home because of income, credit, who knows what. And so I would always tell first-time home buyers, get with a realtor, get with a lender immediately, even if you're looking at down the road, just so you know what you're looking at.
Well, and one thing I'd like to add to that too, if I may, Dan, is that, the buyer being educated, know who to believe and who's biased. And I'm not going to pick on the one company, but well, I might a little bit. But I'll be careful with it. Is that a lot of people go online to figure out what something's worth, and in real estate, houses are not a commodity. So don't go to your favorite web portal and figure out what a house is worth. There's a reason that lenders like CapEd hire licensed appraisers to establish the value. They don't just go to XYZ website. And if you don't mind, I'll share my screen real quick on something here. It'll kind of illustrate that better.
Please do.
So Zillow is a company that's a data aggregator. And so, not to pick on them, I went live to their own website, and you'll see down lower here, it has, this is how accurate they admit that they are. And so for the state of Idaho, it tells you how many homes have Zestimates. Only 82.6 are within 5% of the sales price. And so if you think about that, 1 out of 20 homes is close to 20% off in their value, right? So if you look at the off-market listings, it shows here that houses that aren't currently on the MLS, over 10% aren't even within 20% of the value. So a $500,000 home is way off base, because isn't 20% of 500 100 grand? So that could be 100 grand low or 100 grand high. You have a $200,000 spread. So again, no offense to this company, but Idaho is a non-disclosure state, which means they don't have access to all the data like a realtor does through the MLS. So we shouldn't expect them to be accurate. So please use it for finding out information on schools, neighborhoods, photos, a bunch of other stuff, but do not use them for value.
Yeah, we've seen certainly had that conversation many times with home buyers of, or on the refinance side, where somebody comes in and says, Zola says my house is worth $500,000 and I want to do a cash out refinance, and we get the appraisal comes in dramatically low, and sometimes higher, but seems like more often we get caught into a situation where we end up below appraisal. So that's a great advice. Well, we're kind of bumping up against our time frame. I was just going to check the chat. I don't see any other questions. So for those of you out there, if you have any last questions for Jim or Jordan or myself or Kitty, you got just a moment to type those in. And while we wait for that for just a second, I wanted to just ask the two of you. I was unfamiliar with the idea of love letters, and until recently. And so I wanted to ask you real quick about explain what a love letter is, and are there is there any benefit to doing that if you're trying to buy a house?
I've seen them, and NAR is cautioning against them, the National Association of Realtors. Reason for that is you could very, very easily find yourself in a fair housing pitfall. Again, we're required to submit all offers. So if it's added as an addendum or an exhibit, it is something that must be passed on, but there certainly is some risk to that. I understand a buyer wanting to set themselves apart, but I think the best way to do that is as you said earlier, a good, strong pre-qual letter, a healthy down if they're able to come up with it. But at least on my side, from my broker, and I'm not the owner, so I don't carry the same liability, but they're frowned upon on my side.
I echo what Jordan said on that. You have to be very careful with your words, because when you submit it via a fax or via an email, it's very easy to take out of context. So if you think you're going to appeal to a seller with a love letter saying how your dog's going to enjoy the backyard, and you find out the seller's allergic to dogs, or their child was bitten by a dog, or if it talks about how little Johnny and little Susie are going to love growing up there and they hate kids, it just opens Pandora's box. So most sellers that I know are like me. They're a capitalist pig. They want to know what the real numbers equate to. They want their agent to do a spreadsheet with closing costs and the emotions. If there's a tie, it helps sometimes, but I try to shy away from them as well.
Sure. Okay, appreciate it. If you have further questions, I come up with all my best questions later after the session's over. But if you have any questions, our contact information is up there, so jot it down. And I know that Jordan, Jim, Kitty, and myself are all very happy to answer any questions that you have, whether it's later this afternoon or 2 weeks from now, or but not 3 weeks. That's just weird. No, I just kid. No, feel free to reach out. Use this as a resource. We're all happy to answer any questions that come our way. So thank you for Jordan and Jim for joining us today. It's been, I think, enlightening and certainly good to see you both again. And so, and then we have our next lunch money webinar coming up this Thursday, 12:10 to 12:45, and this is focused pretty much on just the first-time home buyer, different programs, different opportunities, things that the lender can do to help, and then different programs that are available out there through the Federal Home Loan Bank grants or the grants available through Idaho Housing loans. I think a lot of first-time home buyers don't know that they can buy a house with as little as 0.5% down. So $400,000 house you can get into for about the price of a moderate mountain bike these days. So if structured correctly, and there's credit concern or credit qualifications and things, but we'll talk more about that on Thursday. So please reach out and join us. Again, thank you to Jordan and Jim and Kitty and Todd Christensen down there. Lisa who runs the show here, we know. Anybody last minute, anything else to add?
Thank you for the invite.
You betcha. Thank you so much.
Yeah, I would like to add that this is recorded, and this will be on capedcu.com, where all of the lunch money webinars are currently listed. And we have 3 more lunch money webinars. This one that's listed here, and Dan and Kitty will be involved with all 3 of those with excellent information for you. So if you missed something on this webinar, please feel free to go back and watch it. It will be recorded there for you. And then also our first 2 that were with Raymond Yee with Sally Mae. So we have some good content on our site for you to go back and watch.
Thank you, Lisa, Kitty, Jim.
Thank
Jason,
you, everyone.
Jordan, thank you.
Thank you, guys.
All right.
Thank you.
Thanks. Bye.
Thank you.
Have a good day, everyone.